It seems that it's definitely a central bank monetary policy theme this week. We've got the ECB meeting, the BOE, Bank of Japan as well. They're not expecting to make any significant move, but we know they should be downgrading their growth prospects. Royal Bank of Australia keeping rates unchanged in today's session as well, and China hiking rates today. So quite a flurry of economic news on that front.
Yes, China came as a surprise. Not many people were expecting it. Not that we're really ahead of the curve in terms of understanding Chinese policymakers, but the markets generally brushed it off. I think everyone's waiting for the data that's coming out of the US, the minutes from the meeting. Yeah. Currencies have been largely trading in a range. And I guess we wait for the minutes and a statement that's potentially confirms the dovish stance of Bernanke, despite the fact that there are a lot of people calling for a more hawkish stance. I think that we'll only get new fresh direction tomorrow in the financial and foreign exchange markets.
It's quite fascinating when you mentioned that the markets didn't really respond to China. We know it's the second rate hike this year so far. It's the fourth since October last year. And it seems that it has been anticipated that we'll see many rate hikes of this kind going forward into 2011. What is also very interesting is one of the reasons that we have seen massive inflation in that country is because of the stimulus package, because of quantitative easing as well, and higher commodities. Do you think that this is going to filter through in the US economy? What do you think the stance of the Fed should be at this point?
I think the Fed wants to see its quantitative easing program run its course. They have to stand by what they've said, otherwise they may look to have made a mistake. So there's no doubt that quantitative easing, in my mind, will continue till the end of June. Deflation is definitely not an issue at the moment in the world. Commodity prices and some of the leading indicators are suggesting that we are turning around, economies are growing. Inflation is becoming a concern rather than deflation. And I think that we're going to have to see rate normalization. We saw the ECB come out some time ago and tell the market that they're going to look to hike. We're pricing in about 22 basis points of the 25 for April. I think that that's a foregone conclusion that we're going to do it. But I also think the ECB has carved out a separate division to handle the affairs of periphery Europe. And they're going to stick to their mandate, which is controlling inflation. And as a result, they need to get their rates up higher to combat the inflationary pressures.
With regards to the euro-dollar cross, yes, the euro is under slight pressure, but we're still sitting at very close to 143 to the greenback. One of the reasons that the euro has been coming under pressure is Portugal got a downgrade by Moody's. Do you think that the US debt issue hasn't really been resolved as yet, and we're going to see that massive volatility in the euro-dollar cross?
I think euro-dollar is an interesting cross. I think that periphery Europe makes it difficult to understand what's fair value for the euro. If you look at the stronger economies like Germany, they're doing phenomenally well. They're benefiting extremely from the weaker euro. On balance, I think if periphery Europe can stabilize and Spain doesn't default, I think that the euro will probably continue to strengthen relative to the greenback. I think that the dollar is going to continue to weaken. I think it's going to be the US policy, even though they don't come out and state it as much. Yeah. But I think that we are going to see a weaker dollar.
Let's touch on the local currency. At 672 or so, yes, we did hit around 668. We saw a little bit of strength, but the truth of the matter is that we're still seeing buying into the South African story. With regards to an ECB rate hike and the play between high-yielding countries and the emerging and developed world countries, where does South Africa stand in all of this?
I think if you look at yield curves, Europe's pricing in almost 170 bips of rate normalization, and the Forex markets will take that into account. In our own market, out to 1 year, we're also pricing in for potentially 100 basis points of rate hike. So you may argue that the Rand may have run its course. My personal view is I think that the Rand can continue to strengthen as long as global growth isn't threatened too much. I think you're seeing an allocation of global savings into EM continue to happen. Global asset managers continue to win mandates, have to put money to work. At no stage do I think people are overly weight Rand, and I think that it continues to support the Rand.
At this point as well, I mean, you're talking about no real Rand blowout coming to the fore. Some have been anticipating that in a sense, but I suppose the US dollar is also far too weak to anticipate a massive Rand blowout. If we do see shifts in talk from the US Fed, could that also perhaps result in some outflows out of the local currency?
Yeah, I think today in the course of the week, if we suddenly heard that the US was starting to signal that they were going to start to faster pace of normalization than the market was suggesting. Currently, I think we're pricing in about 45 basis points of rate hike for this for the rest of this calendar year in the US. If that were to that program were to accelerate, I think the dollar would suddenly gain. You would see money potentially flowing into the US. But I think once that's settled, you'll see the fundamental trend get back in place, which is rand strength and dollar weakness.
Fantastic. Garth, thank you so much for joining me today.